Good evening and welcome to the Financial Report. HSBC launched a $3 billion share buyback on Tuesday after reporting a 25% fall in first quarter profit. The bank added that loan demand and credit quality may be affected by the global trade war triggered by U.S. President Donald Trump's tariff policies. Nasir Karim with more.
HSBC reported first quarter profit before tax of $9.5 billion compared with $12.7 billion a year earlier. The pre-tax profit beat analyst expectations of around $7.8 billion. HSBC shares were up 2.6%. The London-based bank said the fall was mainly because of one-time charges from business disposals in Canada and Argentina. It reported $900 million in expected credit losses for the quarter, including $150 million reflecting heightened economic uncertainty. The bank, Europe's biggest lender by assets, said it could book an extra $500 million if higher tariffs lead to a slowdown in global growth. HSBC said in its earnings release that protectionist trade policies is creating volatility in economic forecasts and financial markets and adversely impacting consumer and business sentiment. CEO George El-Hedary said in a conference call that they have seen significant drop in business volumes along the US-China corridor in sectors that have not been given a waiver or reduction of tariffs. Consumers and businesses have become more cautious as the trade war roils financial markets and raises fears of a worldwide economic downturn. Some analysts describe the share buyback as a positive surprise. Corporate and institutional banking, its biggest earner, provided $7.2 billion in revenue in 2024, up 11%. Its international wealth and premier banking operation showed a 12% rise in revenue after strong performances in its wealth business. Nazri Karim, TVB News.
Asian stock markets were largely higher today. Tokyo markets were closed because of a holiday. Hong Kong's Hang Seng picked up almost 0.2%, while the Shanghai Composite Index edged 0.1% lower. In South Korea, the Kospi jumped 0.7% and Australia's S&P ASX 200 rose 0.9%. Markets have gotten a respite from the sharp swings that had rocked them as hopes rose and fell that President Donald Trump may back down on his trade war. Markets were rattled overnight when U.S. Treasury Secretary Scott Bessent told CNBC it was up to China to de-escalate tariffs. The Wall Street Journal reported on Monday that Trump was preparing following widespread speculation over the issue to adjust his 25% tariffs on imports of autos and auto parts. The Hang Seng Tech Age closed up 0.62% to 5,019 points. Over to 10 most actives. Leading the chart, Tracker Fund was the most active stock with highest net outflow of $2.6 billion. It closed up 4 cents. Tencent shed $5.20 or roughly 1%. Sliding in tandem was Alibaba, down 20 cents. Meituan, meanwhile, rose $3.70, jumping past the $132 level. Hang Seng China Enterprises Index down 20 cents. Xiaomi down 50 cents. Oh, it's 5 cents. BYD, meanwhile, down $9.80 or 2.5%. And that's the Financial Report. Thank you for watching.